Welcome to another edition of American Countdown. Tonight, resolve the Supreme Court's decision about the protection of employment discrimination for those who are gay or transgender is in fact the right legal decision, even if it's not the political outcome many on the right sought and would like. That's because justices that come from a conservative constitutionalist perspective do not look at what the outcome is and then try to create the legal standard to justify that outcome. They don't see their legal analysis as means to serve a particular ends. They simply apply the law and follow it, even if it leads to a public policy outcome that they dislike politically, even if it leads to a outcome of an individual facts of an individual case that they would prefer not happen. That's because that's what true constitutional jurisprudence requires. And that is, in fact, I think when we look at the analysis, why that was the inescapable analysis, despite its controversy. Trump's justice appointment, Justice Gorsuch, who wrote the opinion, who authored it, was simply following good constitutional legal analysis, even if it did create a political outcome that others didn't like. It also did not mean what a lot of the doomsayers interpreted it to mean. But we'll come back to that a little bit later in the show. Tonight, first starting off with the COVID-19 update, which is suddenly peaking in the news again as they say Trump is going to use the effectiveness of his rallies. All of a sudden, the same press that said mass protests are fine and not a problem for COVID are suddenly saying mass rallies are terrible when they're done for Trump, and that there will just be a suicide pact amongst Trump supporters to even go there and partake or participate. The public interest in Trump's rallies is extraordinary. Almost 1 million people have applied to just go to one event with about 20,000 people in Tulsa, Oklahoma. The desire for Trump to get back out on the road, to reconnect to his audience, to reconnect to his base, to reestablish his appeal in the country, to reestablish his populist message and legacy is at a fever pitch. And the president is right to reignite that part of his rallying base without regard to the various scaremongers that may be out there. And he, in fact, tweeted to that effect today and yesterday. In the same capacity, when we look at the actual COVID-19 data, we don't see evidence that supports what the mainstream media is trying to propagate and push. The scaremongering, aside from having no credibility in the media after they called for a complete mass protest and riots as being completely okay with the pandemic, the actual evidence does not support any of the lockdown logic. It never did. But the evidence continues to mount in that regard. Consider this chart about the number of deaths per day in the UK on a 7-day rolling average since the peak in early April. As we forecast on this show, American Countdown, we predicted that, in fact, what we would see is we would first see a sort of exponential rise in the earliest stages as the virus reached the most vulnerable and susceptible to it. Often these people were over the age of 80, had multiple comorbid conditions, on average at least 3 other deathly diseases, and that made them very vulnerable and susceptible, and COVID was simply changing the time frame and accelerating the time frame of their passing rather than increasing the other numbers of excess deaths over an annualized basis. And then it would flatten out, and then it would begin to decline precipitously. This is what Professor Levine, this is what other professors, Professor Ioannidis at Stanford, others had been pointing out from the inception. Looking at simply letting the data tell us the story, not the politics misshape and misrepresent the data to tell us a different story. In the same way good constitutional legal analysis requires following the law, no matter the public policy or case outcome that may happen in any particular instance, so does following the data and the science require following actually the data and the science, not where politics may want to direct you. And in that capacity, what we predicted and what we forecast, and a good way to put a filter on someone's analysis is how accurate they can be at near short-term predictions. If they're really bad at it, that's analysis that you probably shouldn't trust anymore, such as the institutional press. If it continues to have a particular political or polemical angle that has a propaganda effect, then what you're listening to is propaganda, not actually news, not actually data, not actually science, not actually law. Well, in this same context, we forecast that it would flatten and then precipitously decline based on the data, based on the science, based on what Nobel-winning laureate professors were saying. And that is, in fact, what happened in Wuhan. That is what happened in Asia. That is what happened in the Middle East. That is what happened in Europe. And that is what has happened in the United States. And in this chart involving the United Kingdom, where they're still debating whether to reopen or not, while they have riots on the street supported by the media supporting various BLM rioting activities and looting activities and assault activities on the street. Over 27 police officers injured. Statues taken down. They had to do special protection of Winston Churchill statue because these so-called anti-fascists wanted to destroy the statue of the man most responsible for taking out the fascists in World War II. And, well, what does this chart show about the number of deaths per day in the United Kingdom, in the UK? Well, what it shows is exactly what we predicted before it even happened. It had the early exponential rise in end of March, early April. Then it hit a flat line, then it precipitously declined, and it continues to precipitously decline. There were people who thought, remember the modeler said it would just be a flat curve, and that then you would have a constant, continuous rate of deaths that in the UK they're predicting was going to be 600 a day continually back in April and May. Well, instead, it's all the way down under 200. The number just keeps going down, 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 and that is true across the Western world. There simply is no factual, evidentiary, scientific basis for continuing any form of lockdown. We're probably going to have less than 200,000 deaths in the United States attributed to COVID, and the excess death number will probably be even smaller. In the same capacity, if you look at the Johns Hopkins data chart of the where people have looked at what an actual the rate of testing is, and what you see is the daily positive test. That's the number the media is reporting. And why is that? Because we have the highest number of total testing that we've ever done. So, of course, the number of positive tests is going to go up when you're testing far more people. What you want to look at is the percentage of people testing positive. That's the relevant number. That's the pertinent number. Well, that number is now under 3%. That number has been declining just as we forecast since mid-April. It just keeps going down and down and down and down and down and down. So ignore the media trying to hype false information about COVID, fake news information about COVID, trying to make it sound, take the data and twisting it in such a way that it sounds the most problematic. Hospitalization rates are declining, death rates are declining, and the number of people testing positive are declining. And that has been the same now for 2 months, exactly as we forecast, exactly as we predicted. In the same capacity, if we look at another chart that was done by our friend, the ethical scientist, that has his, I think he calls it an attendodemic chart, and he has similar data showing the same, that his predictions have turned out accurate, and showing that currently we're at 3.7% positive test rate. It has just dropped off a cliff since early April, just as we had foreshadowed. And the ethical skeptic, as he's called, you can follow him at the ethical skeptic on Twitter. He details these charts every day. He has them across different states, different time zones, different countries. And he shows that, in fact, the most significant, relevant, pertinent data point, aside from declining deaths, aside from declining ICU rates, aside from declining hospitalizations, is, in fact, the declining positive test rate. So when you're seeing these numbers of tests, more people tested positive, that's only because we are testing at a record level. What you want to know is what percentage of people are testing positive, and more importantly, what degree are people having to get hospital care or facing a deathly risk. That is, in fact, not occurring. What you're having is a lot of younger people getting tested, finding out that they have it, not having any major consequence to it, and that the positive test rate now, almost 97% of people tested negative who actually took the test. And amongst people under 65, recent survey data shows 99.99% survive. That's the survival rate. So there is no major risk. Indeed, if we compare it to Sweden, where they are measuring the death of all causes per week for this flu season over prior years, what they're seeing this year is actually below average for a typical year. So they're seeing a number that's average or below average. So the idea that there was going to be this wave of excess deaths if you didn't lock down has been proven false by the data from Sweden. In the same capacity, they have some test results from TwinCities.com, the Pioneer Press up in Minneapolis, Early test results show few protesters caught COVID-19. Well, of course, that's because going outside, being outdoors, being in the sunshine, being in the heat was never a risk. So the media hypocrisy was exposed by saying go out and protest, go out and loot, go out and riot. But the data always showed, the data always substantiated that there never was any real risk from being outside in the sunshine. You don't need to wear masks. You don't have to worry about social distancing in that context. Your risk was extraordinarily low. Viruses like flu-like viruses simply do not survive in humidity, struggle in heat, don't transmit well outdoors, and were never a major risk anyway for people under the age of 65. And so that's what we're seeing again from additional data. We've now seen a mass experiment, mass protests. If these mass protests can occur without any explosion of deathly disease, why can't NFL stadiums start reopening and have full-scale tickets and games come late August, early September with preseason and then the regular season? Why can't college football do it? Why can't President Trump have all the rallies he wants to have? There's no longer any logic behind keeping us locked down when we know the data was exaggerated from day one, and we're seeing real live testing. There was no more mass participation in public protests than in the Twin Cities. They already have test results 2 weeks later, and what are they finding? What are they seeing? No major growth rate at all in the deathly rate of the COVID-19. There's simply no longer any factual, empirical, medical, scientific basis for continuing this lockdown nonsense that only jeopardizes the president's reelection and people's economic and material well-being, as well as their psychological and mental health. Indeed, there was a study printed in the Telegraph. The headline is Inside the Swedish City, that may prove the country's strategy, Sweden's strategy, was right all along, by Richard Orange. In Malmö, Sweden, the coastal city has shown a remarkably different result, with few fatalities and a remarkably low death rate, even though they never, ever locked down. The reality is if you stayed away from certain travel-sensitive communities and constituencies, certain uniquely dense urban populations, and nursing home areas, this disease, the COVID-19, was less threatening than the flu. And that is what the town in Sweden shows, that this coastal city reveals, and the data discusses in this Telegraph article. There simply was no evidentiary basis. We got to see a real live-time experiment in what happened, and various mobility measurements, employment measurements all showed that they, in fact, did not engage in much social distancing at all in that particular area of Sweden or in most of Sweden. And yet they experienced something that was less deadly than an average flu season in Sweden. There was never any basis for shutting down. There was never any basis for locking down. Don't let them try it again next time if a so-called second wave purports to appear, as the media is already trying to push. Meanwhile, the toll that the effect of the lockdown had, both economically and on people's mental, psychological well-being and in terms of life expectancy, the evidence for that continues to grow. As we talked about the risk that when you stick people effectively in a form of isolation, of a social quarantine, when you take away their school, take away their work, take away their participation in public life, take away their participation out in public at public parks and recreation centers and on the beach, the inevitable and inescapable result was going to be devastating damage to the neurological structure of the brain, particularly of children and teenagers, that would never be recoverable, psychological and mental health harm, rises in domestic violence and other forms of mental health problems. Indeed, the life expectancy lost, more and more studies will show and are showing, it far exceeds what damage COVID-19 did, even taking in the inflated numbers that COVID-19 data strategies are actually producing. Take a look at this headline from this article in the Wall Street Journal: the toll that isolation takes on kids during the coronavirus era. As the subheadline reads, playing with peers has important developmental benefits, and doctors worry that children missing out on them now. Indeed, after 6 weeks of lockdown due to COVID-19, they report about how an 11-year-old daughter was starting to suffer from a range of mental health issues that would have continuous and constant effect over time. So indeed, the negative effects of the lockdown are starting to bear fruit, unfortunately. In the same capacity, we have an article from The Hill saying we must learn from the shutdown mistake by Vance Ginn. He explains some of the key reasons why the lockdown cannot reoccur. As the article reads, disruptions caused by fear of COVID-19 and the shutdowns ordered by state and local governments dramatically changed our lives. Indeed, he notes that the lockdowns are responsible for a conservative estimate of between 700,000 lost years of life every month, or about 1.5 million lost life years so far. So, and given the length of the lockdown ended up being 3 months in many parts of the West, you're talking about 2 million life years being lost. The cost of the shutdown, as the article reports on lost life years, is at least double the number of lost life years from COVID-19. So this takes into consideration that the life expectancy when someone dies who's 20 is more dramatic and effective on life years and life expectancy than someone who's, say, 85 who dies a month or two earlier than expected. So this is how actuarial tables are adjusted. This is how economists look at it. This is how governments, public health officials are supposed to look at it. They're supposed to measure the impact on life in terms of life years lost, not just individual lives lost because of the difference between somebody dying a week early and somebody dying 75 years earlier than expected. And so in that capacity, what we're looking at is something like double. It's probably going to end up being triple or quadruple. Though we lost more life, far more life from the lockdowns and from the panic than will have ever been lost from the pandemic. And some of the most vulnerable people, the poor, working poor, the disabled, the mentally ill, the children who lost school and had psychological damage from what took place, neurological damage from what took place, they're the ones who are going to suffer the most because of the inanity of the insanity of the lockdown. But that doesn't stop the consequences from the lockdown. On the economic side of the equation, we're seeing the same net effect continue unabated. The predictions that we would have an easy, quick, rapid, V-shaped recovery that would bounce back and the economy would be back within months of where it was when the shutdowns and lockdowns began is increasingly proven false. The people who advised President Trump that don't worry, the lockdowns won't have any major economic effect, you'll save millions of lives that would otherwise be lost, you must lock down, you must go along with it. President Trump got hoodwinked. He got had. This is what happens when you have advisors that are not behind you, that are not really supporting you, that are probably going to go into the ballot box and vote against you. This is because he's consistently employed the wrong people around him. We see that in John Bolton, neocon warmonger who he never should have hired. He did, caused him problems during the impeachment, and now he's out. Bolton's writing a book, piggybacking off of that short-lived fame, attacking the president. The president at some point has got to take responsibility for who he himself hires. Quit hiring people who worked against you. Quit hiring people who campaigned against you. Quit hiring people who want to see you defeated. Quit hiring people who don't like you, don't share your beliefs, don't have your instincts, and despise the core Trump voter. Quit hiring those people. Quit depending on those people. Quit relying on those people. And then maybe you'll quit making monstrous mistakes like going along with lockdowns that crushed the economy and unleashed these riots. So I think the president has some acknowledgement that that's the net effect of what's happened, and that's why you've heard him say there's no chance he's going to go along with a second lockdown. But the reason why he's in trouble right now, the reason why in the betting markets he's trading at or under 40%, that for the first time in the election season since the president's election in 2016, he is now an underdog to win re-election. Joe Biden is now the favorite. This is entirely the effect of the unemployment losses from the lockdown. When we have real unemployment that may be around 25% if you follow shadow stats online. Shadow stats is a way of tracking data that is consistent with how we used to track it before they changed and shifted it in the 1990s and again in the 2000s to manipulate the data to make it look softer than it is. Well, look at this headline. 24-Hour Fitness files for bankruptcy amid the onslaught of gym closures, according to Bloomberg. Indeed, as Bloomberg reports, 24-Hour Fitness worldwide sought court protection from its creditors, unable to keep up with debt payments after the COVID-19 pandemic lockdowns shut down their gyms nationwide. As they noted, it's no guarantee that members will ever come flocking back, and cancellations for the gyms are even more devastating because it costs twice as much to recruit a new member as it does to retain an existing one. Indeed, roughly 28% of gym goers are expected to quit going to the gyms this year. That's the net effect of it. We've instituted cultural changes because of the lockdown logic, also economic impact in terms of what people can practically afford to spend, that's having ripple effects throughout the economy. Indeed, they note that they expect to close down, even with the bankruptcy restructuring, they expect to close down at least 135 club leases they're going to just reject. And they may lose, they said the majority of locations to be closed are in California and Texas. They expect over 8,000 employees, or roughly half of their workforce, may see their time reduced or laid off. That's the net effect of the lockdown logic that was unleashed by the Fauci-Birx crowd.
It's finally here. Introducing the new Survival Shield X2 spray. Available now for 33% off at InfoWarsStore.com. Listeners have been asking us for months to develop an iodine spray made with our exclusive Deep Earth Crystal Nascent Iodine. Our proprietary new Aerodyne technology allows us to harness the full power of ancient iodine crystals from 7,000 feet below the Earth's surface into the ultimate spray formula. Iodine is an essential mineral that helps support thyroid health, healthy metabolism, and healthy cognitive function. Get the new Survival Shield X2 spray for 33% off intro pricing at InfoWarsStore.com. That's Survival Shield X2 spray at InfoWarsStore.com.
CalPERS, one of the biggest pension in the world, reflecting a widespread problem that all pensions have, because you have all these state government and federal pensions that are supposed to return about 7% a year in order to make all the payments they need to make to their aging, retiring workforce, firemen, police officers, government employees, others that are supposed to be protected. Well, the reality is they have not been meeting that 7% for more than a decade now on average. And that's in part because the Fed has deliberately manipulated interest rates to inflate the asset bubble of the stock market, and in order to deal with the government debt that continues to explode. So in order to make that manageable, to make payment on the debt manageable, what the Fed has effectively done is arbitrarily keep interest rates low. That forces pension funds to look for other rates of return because interest rates won't give it to them. And instead, they seek riskier and riskier forms of debt, including corporate bond debt. And in turn, either they have higher risk assets than they're supposed to have as conservative lending institutions, or they're not getting their 7%. Well, guess what CalPERS, the top U.S. pension fund in the country, has said they're going to do? A notoriously corrupt pension fund. And they really leaked this because they want other pension funds to follow suit. Here's the headline from Financial Times. Top U.S. pension fund aims to juice returns via $80 billion leverage plan. That's right. CalPERS is going to go into the leverage business. CalPERS' quote is to move deeper into private equity and private debt by adopting a bold leverage strategy. Indeed, the leverage could be as high as 20% of the value of the entire $400 billion fund. They might put $80 billion plus at risk. What does that mean? That means they could lose 20% overnight because it's now going to be heavily and highly leveraged. Indeed, CalPERS assets represents currently, they're already 30% short of what they need. They only have about 71% of what they need to pay benefits to the 2 million police officers, firefighters, and public workers who they have made promises to pay, who they've taken their money over the years to purportedly invest in it. The estimate is that they have less than a 40% chance of hitting that 7% target over the next decade, which will leave them even shorter. They're already 30% short. And so they need 7% a year just to try to start to catch up, to try to meet their obligations. And now they're going to put another 20% at risk. They may be short by 50% if this goes south or sideways. Notably, they noted the stock market slide increased the long-term structural problems across the entire U.S. public pension system with ballooning unfunded liabilities. What that means is they got promises to pay and they ain't got the cash to pay it. And now they're going to start getting involved in riskier and riskier financial transactions. So you have the most conservative institution by law, by rule in the country saying they're going to leverage 20% of their total assets to try to catch up. That usually spells debacle and disaster. Indeed, as one analysis from the Naked Capitalist put it, CalPERS plans to blow its brains out, seeks to increase risk by boosting private equity, private debt, and leveraging the entire fund. As the article by Eva Smith details, this is a, quote, fast path to ruin. Indeed, by leveraging the entire fund, they are loading up on risk and engaging in speculative investment. Notably, these speculative investment plans apparently were done in secret and leaked to the Financial Times. Because even though the fund is required by law to discuss the matter in public under the Bagley-Keene Open Meeting Act of the state of California, CalPERS continues to conspire in secret and never had this meeting or discussion in public. There might be a reason why they didn't do so, just for the same reason they leaked it. They want other pension funds to jump on the bandwagon, so they're going to be less at leveraged exposure and risk in the hopes that they can create a bubble in the stock market to reap the whirlwind rather than reap the tornado that they're likely going to be doing. The article notes that this is turbocharging risk with fund-level borrowing. They note that, in fact, the lockdown has severely damaged entire sectors of the economy. Business travel, severely damaged. Restaurants, severely damaged. Gyms, as we just talked about, one of the leading gyms, having to go bankrupt, saying that almost half of its employees may never come back, saying that gyms across the country are going to be shut down for good, forfeiting leases on over 100 different gyms across the nation. Live entertainment, severely damaged. Various stores, severely damaged. Commercial and residential real estate, seeing the fallout. Indeed, the commercial real estate company one of the companies that I rent from that has had offices around the world is closing up shop in 30 days for the first time ever. So that is showing real impact. Residential real estate is seeing the impact across the country as there's been a decline of the number of houses put on the market. And in many major cities, they're seeing sudden rises in occupancy rate and sudden interest in people getting out as quickly as possible, likely compounded by the riots and the political response of local governments to those riots. As the article also notes, state and municipal governments have been severely damaged. We'll get into that wreckage a little bit later. They noted that corporations already binged on debt between buybacks and loan-based rescue schemes throughout since 2008 in the last financial crisis. And there's more articles and more people discussing what we've been talking about on this show for months with George Gammon and others. You can follow George Gammon at his YouTube channel where he'll do daily interviews and daily accessible, actionable videos that can help explain some of the economic factors taking place as the Fed's balance sheet skyrockets and almost doubles in 90 days. But as the Fidelity International boss, Ann Richards, explained to the asset management industry, there is a real solvency problem facing multiple businesses on Wall Street and in the business world, something we've been talking about for months. It isn't a liquidity problem. It's not about access to cash. The Fed can print as much of that, and the Treasury can print as much of that as they want with the help of the Fed. The problem is solvency. Debt has been ballooning. We are at record levels of debt at every level of measurement. Consumer, small business, major business, big corporation, Wall Street, pension plans, state governments, federal governments. Everybody has just seen their debt bubble skyrocket in the past 10 years to try to create the illusion of a sustained economy that does not have as its core basis the job-building program that is needed that President Trump was starting to have success instituting before he let the lockdown steal it from him. Indeed, the article notes that there are whole industries that may be left completely unable to operate due to their high levels of debt and the lack of access of an injection of capital that will be needed. They also note, the article notes, it took over 20 years for U.S. stocks to get back to their 1929 levels. And the Fed is now announcing the second quarter forecast may be a negative 48.5%. In other words, almost a 50% decline in the second quarter in the United States. That is, as the article says, a probable depression in terms of economic statistics and terminology. Indeed, as they note, virtually all asset classes in the stock market are expensive and the macroeconomic environment is awful. And so it suggests a major problem that CalPERS is going to start to get involved in heavy leverage that puts the biggest pension fund in the country at risk. What happens when CalPERS is 50% short? When CalPERS needs another $200-300 billion to meet its obligations? State of California is either going to come begging to the feds or going to be jacking up taxes like crazy. So while you're living in a California environment increasingly impacted by homelessness, increasingly impacted by rising crime likely to come about from the Ferguson effect of the riots and the BLM defund the police movement popular in major California cities, while you have increasing regulatory dictates from the state on everything possible, conceivable, and imaginable, you're going to have badly underfunded pensions that the state's likely not going to tell their pensioners, hey, we're not going to give you 50 cents on the dollar of what you're entitled to. No, they're more likely to come looking for you, the taxpayer, to foot the difference to make up the bill. Indeed, as one of the commentators to the article noted, bold move is not what you want to hear from your pension administrator. They're supposed to be the conservative of conservative, the green eye shade of green eye shades. In that same capacity, anticipating a rise of bankruptcies, this article from Bloomberg Business section, Delaware is losing its luster as the best place to go broke. It details how there's an ongoing fight in the court system to compete for bankruptcy business. So you have courts anticipating a surge and wave of bankruptcies and courts competing to be the best court to come to because it will impact and influence their local legal marketplace and give the local court system extraordinary power and influence. The article notes that experts say could be the biggest wave of corporate failures in recent memory is what's coming due to the lockdown economics and the underlying structural problems exacerbated by that lockdown. Indeed, they said traditionally corporations preferred New York and Delaware because the judges in those courts tended to favor corporations over unions, over retirees, and over smaller creditors. In other words, the big banks and the big businesses were the ones that the bankruptcy courts of New York and Delaware tended to tend to. I personally experienced that professionally in dealing with a Delaware bankruptcy judge in a CalPERS case where CalPERS had defrauded the people of the state of California of almost $1 billion with the help of a lot of Democratic political allies, and now have had to appeal the case all the way up to the Third Circuit Court of Appeals to try to get some justice because there wasn't any in the Delaware bankruptcy court. Indeed, they say now the corporations are, quote, looking for an edge, which typically comes from being able to guess how a court will rule. And for that, they want judges who are predictable, judges who handled a large number of cases. And that's why there are judges actually competing to get these more bankruptcy business. But it tells you something about where the economic structure is, that judges and courts focus is where can they get the most bankruptcy business. That's not the sign of a burgeoning economy ready to just take off. And indeed, if we take a look at another indicator of this, a chart, that's the Fed balance sheet versus Treasury debt, what we see is that almost all of the Treasury debt appears to have been bought by the Fed. That means, there have been trillions and trillions of dollars of new debt issued just in the last several months to fund all of the various stimulus packages, to like the CARES Act and the rest, and the Paycheck Protection Program, just to deal with the lockdown effects of all these crazy governors and mayors across the country in response to an exaggerated risk of COVID-19. But what this chart is showing is that there are almost no purchasers in the open public marketplace, not governments, not corporations, not individuals, for purchasing this Treasury debt. It appears that the Fed had to be the primary purchaser. That, too, is a bad indicator over the long haul. Meanwhile, over the past couple of months, one of the reasons for this strange stock market resurgence when the real economy was tanking was because more and more people took their excess cash from their stimulus checks or excess money from their that they had saved up or excess money that was from their unemployment paying more than their employment paid for. And rather than spend it out in the consumer economy that could create real jobs, they decided to go to a site called Robinhood. Robinhood is a new sort of app and new program designed for ordinary people to access the stock market. So you had a bunch of ordinary, everyday people making between $30,000 and $80,000 a year, taking their $3,000 extra combined stimulus checks and savings and putting it all in the market suddenly because they thought they could trade it with Robinhood, and it may have been a principal reason for the surge in the stock market. They may now put them at great risk and exposure. Indeed, Robinhood calls it investing for everyone. Robinhood, a pioneer of commission-free investing, gives you more ways to make your money work harder. That you can break free from commission fees and all of this dynamic. And basically, it increased the number of everyday, ordinary, small-scale day traders. People that, had a job, now didn't, decided to become day traders instead, like the guy at Barstool Sports was bragging about. Well, one of the places they were investing heavily in was Hertz, even after Hertz declared bankruptcy. Well, that may not turn out so good. Look at this headline from Yahoo News and from Bloomberg. Hertz warns stock buyers will need miracle to avoid wipeout. That's right. Hertz's Global Holdings warned prospective new stock investors. That's all these people who took their stimulus checks and put it on Robinhood and put it in the stock market, and a whole bunch of them bought Hertz stock. Well, guess what? If they'd been listening to this show, they would have known not to do that. If they'd listened to the George Gammons of the world, they would have known not to do that. But they were paying attention and thought they could play day trader like anyone else. And what it said was Hertz Global Holdings warned prospective new stock investors they're all but certain to be wiped out as the car renter proceeds with a share sale in the middle of its bankruptcy, noting that they're going to have to pay back with common stock all of its bondholders. They have problems with a wide range of creditors, and they're likely going to leave a big fat zero zilch zunka nada for the people who went buying thinking that the stock market was going to boom like it was 1929 Berlin or New York. So the same effect has happened, and that may have another devastating impact on a lot of your ordinary income, middle-income families that made the mistake of trying to gamble on the market. Of note, if you want to get something cheaper, the used vehicle market might be a place to do so, because as this same article details, Hertz has been dumping a lot of its vehicles into the used vehicle market. They say the used vehicle market makes the company's job of satisfying creditors tougher. Why? Because vehicle prices are way down from last year. On average, about almost a 50% discount you can get right now on some used cars, because that's what Hertz is having to dump it at, even when it has the wholesale leverage power that it has. In the same unsettling capacity, there is this article from Bloomberg Law. 1/3 of U.S. job losses are at risk of becoming permanent. That's the headline. 1/3 of the job losses over the last several months, and remember, that's close to 40 million, are at risk of becoming permanent. In other words, they're talking about more than 10 million jobs may have been permanently lost thanks to this lockdown. As this one guy describes it, my job stopped, but the bills don't. Indeed, the article goes into detail, has some charts that are useful, and it talks about a reallocation shock in which firms and even entire sectors of the economy suffer lasting damage from the lockdown. Indeed, U.S. central bankers, the Fed, along with state central bankers around the world, forecast leaving interest rates in the United States near zero for the next 2 years due to an anticipated surge in unemployment that is the highest continuous level since the Great Depression. Remember, we forecast that the likely economic effect of these lockdowns was going to be inducing depression-level unemployment. Now we're witnessing it. Now we're seeing it. Now we're living it. In the same capacity, new research by Bloomberg Economics shows that 30% of U.S. job losses from February to May are a reallocation shock where those jobs are unlikely to return. Indeed, the data suggests that there'll be an initial quick recovery, like we've seen in the end of May, for some portion of the employment market, but then it will level off with millions still unemployed. Something like after what happened in 2008 might be about to reoccur, where we're in effectively almost depression-level economics that's only hidden because of how the government manipulates inflation-related stats and data. Indeed, they're noting that jobs in the hospitality industry, retail, leisure, may have disappeared completely due to the restructuring that occurred. Wholesale and retail have taken major hits. Manufacturing may bounce back, but it has taken a hit. Transportation has taken a real hit. Airlines are still struggling to even have 10% of the same airlines, the same travel, the same daily flights they had before. Research published in May by the Becker-Friedman Institute at the University of Chicago estimates 40% of the layoffs will be permanent, according to the Bloomberg article. So anywhere from a third to 40% plus are never going to come back. And if you look at the trading that's taking place in the stock markets, that's consistent with that. They note that the way in which the markets are trading and not trading in certain industries suggests that half of the U.S. job losses came from the lockdown, 30% were from reallocation that are unlikely to return, and 20% were due to unemployment benefits encouraging people to stay home rather than work because you got effectively an unemployment bonus of about $600 a week for a period of time. And so what we're seeing is that many of these jobs may not come back, period. And that is the effect of the lockdown logic that just thought you could turn off and on an economy like it was a car engine. In the same capacity, let's look at, aside from the impact on state pension funds, let's look at the impact on state treasuries. In an economics article entitled The Fiscal Cost of COVID-19, Evidence from the States by Christos Makridis and Robert McNabb, says that due to the rise in unemployment in the states, you've seen also, and due to the economic shutdown and likely the continued economic harm of the lockdown, of its derivative effect even after reopening, they anticipate large losses amongst sales tax revenue, individual income tax revenue, corporate income tax revenue. They additionally note if there's a decline in home sales or a decline in home prices, that will have an impact on local property tax revenues. They estimate that the average state, just the average state, remember 8 states didn't lock down at all, another 20 states only did a more limited lockdown in terms of either temporarily, in terms of time, or in terms of the scope and scale of the lockdown. They noted that the average state will experience at least a 20% decline in tax revenues, $60 billion nationally in ordinary prices. That's just the average. There's going to be some with much greater.
Hey guys, Rob Dew here with InfoWarsStore.com, and I want to tell you about something that I think has really helped me out and I think can help you out too, especially if you have any problems sleeping, and that's Knockout. Let's face it, our life patterns have been disrupted by this lockdown, this government-imposed imprisonment, and it has definitely affected my sleep schedule. But one thing that has helped is Knockout. I take one pill about an hour before I want to go to bed, and boom, I get a great night's sleep. And just this past Memorial Day, I took 2 of them, fell asleep about 1 a.m., woke up at 8 a.m., ready to go. It really has made a difference in my life, and it can make a difference in your life too. If you don't get any sleep, you're going to be a grouch. If you get great sleep, you're going to be on point. You're going to be mentally focused. You're going to be ready to take on the day. And right now, Knockout is 50% off. It's less than $15 a bottle. You get 30 capsules. Give it a try today. It's at a great price right now, and it can really help you get the sleep you need, especially in these tough times. It's Knockout, and it's available at InfoWarsStore.com.
It's finally here. Introducing the new Survival Shield X2 spray. Available now for 33% off at InfoWarsStore.com. Listeners have been asking us for months to develop an iodine spray made with our exclusive Deep Earth Crystal Nascent Iodine. Our proprietary new Aerodyne technology allows us to harness the full power of ancient iodine crystals from 7,000 feet below the Earth's surface into the ultimate spray formula. Iodine is an essential mineral that helps support thyroid health, healthy metabolism, and healthy cognitive function. Get the new Survival Shield X2 spray for 33% off intro pricing at InfoWarsStore.com. That's Survival Shield X2 spray at InfoWarsStore.com.